chart. And what I like about this level is it's nice and clear, nice and obvious. It's on a daily, so there'll be plenty of eyeballs on this. And we're not there yet. It's a little ways away, a couple of hundred pips. But this is how you'd anticipate a potential setup. You've got a bit of an area that's would be described normally as a range. What happens in these types of patterns is the accumulating orders. So when people call it congestion or things like that, it's not actually what's going on. That's just an answer, a response to something that seems that way, but it's not understanding what's actually occurring behind the scenes. It doesn't give you any insights whatsoever. So accumulations is an area where an institution, a market maker, will be working an area. We just call it a singular, so it's easy to get your head around. But of course, there are many, and they will be using this price action to accumulate orders in the direction that they wish the market to be manipulated and go. So this is the ideal type of pattern that you want to look out for. And as I say, we're not there yet, but you've just got to plan ahead. And the idea is that price comes back to the level and starts to sell off in some shape, way or form at the level where everybody would anticipate that level to be holding, and then some type of move higher up through where those stop losses would reside. So the stops would be above the level like that. And as I've said before, it's not that there is a potential accumulation at the level per se. There may be, because this move hasn't gone across the level fully, but you see how this has gone across the move. Well, there's no stops there when price comes back to this area, because if you're focusing on this particular area, because if you were to sell here, there's a very good chance that you're going to take your profit on the other side of this range, right? When price comes back, this location in here. So if you sold and you took your profits over here, you essentially exit the market, right? You're gone. You're not there anymore. And when you exit, because you've made yourself some dollars, what was there in terms of because you sold there, your stop would be above there. That wouldn't be there anymore. Okay, it goes with you and your profit. So it's not that, like I say, it's not. I've said this before, but it's worth reiterating. It's not that a level necessarily has loads of stops accumulating there just because it's a nice level of support or resistance. That's not how it works, because as I said, people will go. But you see in this area here where some traders sold again, right? Well, in this case, it hasn't gone across the level. In fact, it probably only went about halfway across, right? About 50% of that area there. So there's a good chance that these traders are still in here, because they would expect a retracement, right? So price pulls back, they're going to hold. Now it goes against them a little more, but now it's not. It's working, starting to work in their favor again. So the psychology of the traders who sold in here is that, you know, you would expect, even if you're going to get across that range, you would still expect some type of retracement. So their psychology is okay still. They're still semi-comfortable in the trade. You're also going to get retracement traders selling in here. This is probably a 61% fib. There you go, right? So, and they will look to sell on the underside of some type of structure at that level. So the structure is off to the left, right in and around there. Something like that, right? Resistance, support, resistance. So this would be an ideal location for those traders to sell at the 61. Price puts in a new low down in here. So this is all tickety-boo for those types of sellers, right? And if you sold here, where would you place your stop? Well, if you're a retracement trader, you know, there will be some people who just go above these structures, but when you've got the close proximity of this level of resistance up here, just above your entry, you know, why would you go there? You probably wouldn't. There will be a few people who do that because they're trying to pick off a really tight entry, but in reality, you're probably going to stick your stop above that location. It's just a better place to put your stop, because even if price were to come back against you where you sold, the trade's really still valid unless it gets up above here, right? Then you know that your retracement's screwed, it didn't follow through. Until that point, you're not 100% certain, and you can't be. So this level of resistance is probably where they're likely to place their stops. Now, what this is doing now, just think about this process, is adding to what? We haven't gone across that range, so you've still got those sellers at resistance who are holding the positions, right? And they're in here at varying places. You've got just to be totally pernickety and totally descriptive about what's occurring in here. There are retracement traders in here too, right? This is a daily chart, so these minor retracements that are like these types of moves over here. Sorry, I butchered the drawing, but you get the idea. There's obviously traders in there too on those lower time frames. Again, adding to what? It's adding to the stop loss equation, because again, if you're selling in here, the proximity of that level is attractive. So there are people in here too. That's just what I wanted to get across. So I didn't want to forget those people. But then, of course, this major retracement. This is a big entry for a retracement trader, so they come in and sell. So what we've got is we've got the resistance traders selling who are still in the position. We've got people selling within these minor structures. You've got retracement traders, you've got breakout traders, right, trading all these breaks of these levels, and then you've got this major retracement in here. You've got people in here as well on those retracements, going short and placing their stops above here. So what you got, if you walk through it all, is you're now getting an accumulation of stops above the level. As I said, that's not necessarily the case all the time. If price goes across the range and people exit the positions, there isn't that accumulation in as far as this is concerned. So it's always slightly different, but in this case there is definitely an accumulation of stops occurring above this level, and what that does is that makes it a huge target for some big institution to transact in this upper area efficiently, right, without slippage, to get a better price, and then down they go. And all these people get their clocks cleaned. They weren't wrong in the direction. They were ultimately correct, but the way that they place their trades is just far too obvious. I know there's a lot of people who trade who don't really think that it's it's like urban warfare, but it genuinely is. If you're just looking at a pattern and you're just thinking, oh, there's a nice pattern, I'm going to take that, you're not really thinking about the fact that, is this obvious? Is this too predictable? Am I just being a mug, right? You've got to realise that this business is serious, and people are trying to do everything to get an edge over anybody. So, because it's money, right? It's all it's about at the end of the day. So you've got this accumulation occurring. So therefore, it is absolutely a potential trade. It might follow through. Right, it may do that, and those people make the money, and then you just continue on. Right, the level then develops further, and then it might develop further, and then you look in again for some type of sell-off at the level, just helping with that equation that there are more sellers in here, and that there's stops above the level, and then some type of manipulation, and then boom, down you go. So just got to be patient, but this is very much a level developing, something to keep an eye on, and that's really how I think about my analysis when I'm looking at a potential manipulation. Obviously we're not there yet, but as I said earlier, what's nice about levels that are nice and well defined like this is that people have eyeballs on it, which means people are watching it to trade it. It's very attractive in that way, and they're the types of levels you want, right? It all pivots off having a good clean level. If you haven't got a good clean level, then it makes all of this very difficult, because if you struggle to see well-defined structures, then guess what? You're not the only one. Everybody will struggle, and therefore, are people actually trading it? And you've got to conclude probably not, and that's no good to man the beast. So it all pivots off having that really clean, very obvious, on a high time frame, big time frames, loads of people watching it, and that's what you really want. It all pivots from there, and then that makes your job of analysing what could unfold a whole lot easier. Without that, without looking left and having that nice obvious location, you'll struggle. So just be selective, and it'll make your life a whole lot easier. And if you want to come and join me and get your new year starting with a bang, to learn my techniques in more detail, then click on the link below, and I'll see you guys on the inside. Have a great day.